Welcome to the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hi, and welcome to Bank Talk. I'm Jordan Kelly, your host and consultant at Remedy Consulting. Today, we're sitting down with Alex McLeod, founder and CEO of Parlay Finance, to discuss small business lending. As a thought leader in this space, we wanted to get Alex in here to discuss SBA programs, challenges from both the business and banking sides, and the benefits of a tech stack which supports SMB lending. So without further ado, let's dive into our discussion with Alex. Alex, thank you so much for joining me on Bank Talk today. Really appreciate you taking the time. Before we dive in a little bit here, can you give me a little bit of an intro to yourself? Give me a little bit of your background.
Absolutely. And thanks so much for having me today on the podcast. My name is Alex McLeod. I'm the founder and CEO of a fintech called Parlay Finance. What we do is we work with community lenders, so credit unions and community banks across the ecosystem, to help get more small businesses approved for loans. So we have a type of software. It's called a loan intelligence system, and it makes that entire process easier, both for the FI and also for the small business. And our mission is to help catalyze the next $5 trillion of economic opportunity in the US. And you may pick up that I don't have an American accent, so I'm originally from the UK, but I moved to the US 10 years ago to work on another financial inclusion initiative. So this has been a really fun continuation for me to work on mission-oriented work with some absolutely amazing people in the community.
That's fantastic. And I mean, I think we probably both know that the community banking, the community credit union space it's just filled with wonderful folks who are looking to kind of better their communities overall. And so anything in that space always tends to have, I think, high praise for me at least. Give me a little bit of a breakdown of SBA lending. How large are these loans?
Sure. So SBA lending is a type of government-backed lending. It's been around for a long time, but I think it's going through a really exciting period right now. I think historically lenders used SBA loans as a one-off here and there. Maybe if a small business wasn't eligible for a conventional loan, maybe they would turn to an SBA loan. It used to be primarily the no credit elsewhere loan, which is awesome that it exists because small businesses need it. And historically, it was probably on the larger side, but there's some really interesting changes in the industry happening right now. So I would say the majority of small business loan requests in general, irrespective of whether they're SBA or conventional, are for under $500K. And so that the SBA loan sizes reflect that too. So you'll see a lot of loans in the 100, 250K range. 500K or below is a really big portion of that activity. And the SBA originally set up this program because small businesses were struggling to qualify for conventional lending. And it's really great to see that, one, right now in the space, lenders are doing more SBA loans, which is great because then it helps those small businesses on the other side. In spite of that, though, I'd say, sometimes it's still pretty manually intensive for lenders to do an SBA loan. And so there's been a lot of improvements in the space recently to try and make that more efficient, more intuitive, more tech forward. So it's easy for the bank, it's easy for the small business. And I'm really excited to see, last year about 70,000 SBA loans were originated, but just in this first quarter of the SBA's fiscal year, they've already done 20,000. So you're seeing growth more already in 25 than there was in 24 lost in Q1 of 24. So I think there's a lot going on in the space and there's a lot of opportunity as a result.
So it's interesting that you mentioned that growth in 25 over 24. I mean, we are not very far into 2025 quite yet. So that is really interesting.
That's right. Yeah. And the fiscal year starts for SBA in what would be for our Q3, Q4 timeframe. But I think it's a great indication of a couple things, right? One, small business lending is a huge focus right now for everyone in the space. Banks know that's where they can compete. Small businesses need capital now more than ever. The pandemic sparked a giant wave of entrepreneurship that's speeding up instead of slowing down. You've got a couple other things coming together. Interest rates just dropped. And so now, where lenders have focused for the past couple of years on deposits and safety and soundness is still important, there's now this reorientation towards focusing on small business lending again. But there's been a recognition, I think, on the bank side that what used to work, which was this more high touch approach, very manual, is no longer viable for growth. We need to bring in tech to do it better. And it's also got a benefit in that we can, using tech, generate a better experience for the small business on the other side too.
Let me set a little bit of the background, a little bit of groundwork here, or kind of help me understand it. So access to capital continues to remain a significant barrier for a large majority of these small businesses, especially among underserved communities. What are the challenges these groups face when applying for a small business loan? What are some of the things you're seeing?
Yeah, I would say the norm in the small business space is that small businesses have a really hard time accessing capital. 50% of small businesses report having their credit needs met. And I actually think that's an understatement. 93% of small business requests are under $1 million, and lenders generally prefer those higher ticket items because it's easier from a loan economic standpoint. And so what that leaves is a really big gap where most small businesses are applying for less than $1 million in funding, but the focus and the method from the lender side is most optimal for loans $1 million or above. And so there's an acknowledgement, I think, in the ecosystem that we need to do better to help those underserved communities and to find ways to make the application process easier too, right? So SBA is a good example of this, but it's not the only place where you see this. The application process for a small business loan is challenging still. There's a lot of documentation requirements. There's a lot of eligibility criteria that small businesses need to meet that they often don't meet off the bat. And they usually are applying without an awareness of what that eligibility criteria is. And I like to compare this to, for these small businesses, it's kind of like taking a pop quiz without knowing what you're being graded against. You don't know what the answers are, right? You're applying, but you don't know what it takes to get to a yes. And I would say that this is the majority of cases for small businesses. And so we need to do better to be able to help them on that underserved side, giving people a better awareness of what it takes to get to a yes, what the criteria are. Sometimes small businesses, they start that process and then they realize how much information they have to provide and they get discouraged. And then they abandon, which then makes it hard and inefficient for the lender. And so, again, a lot of friction, some high eligibility requirements that are harder for small businesses to meet. And then also we, as in folks in the space, are really trying to say, okay, well, these systems aren't working anymore to meet these needs of small businesses. How can we make this easier? How can we help the small business understand what it is that they should be applying for? Because sometimes a small business doesn't know why they should go for an SBA loan or why they should go for something else. And really, this is where good technology systems can come in to help make that process easier for them, more intuitive, and then again, more efficient as a result.
So you know what? I actually think that's a really good lead into the next question I had for you, which is help me flip the script here a little bit and take it from the banker side. Based on everything that you've learned and working in this space, what do bankers say are what are the top 3 challenges in starting or maintaining an SBA program?
Yes. Okay. So the pro, if you're a lender of an SBA program, is that it's guaranteed. So a certain portion of that total loan is backed by the government, which reduces risk. You can make fee income on it as a lender, which is really good. The counter to that is that generally there are a lot of pieces of information that have to be gathered, and a lot of documentation that has to be completed by the lender on behalf of the small business. So the lender can ask the small business for certain pieces of information, but if the small business doesn't know how to answer it, then that entire process is going to be inefficient. And traditionally, what we see is that lenders are using a patchwork of manual processes, maybe some tech solutions, but they often don't talk to each other very well. And a lot of back and forth rework will happen where the lender is asking information from the small business. The small business may have that information or may not know how to provide it. And now we're causing a long back and forth. And that puts a big burden on a lending team, right? If you have lots of loans that you need to close and the SBA is one of several, but it has a higher administrative and paperwork burden, then you might not be incentivized to do that extra work on the SBA side. So for us, it's actually why we created our company, Parlay Finance, was to help with intake, because intake and sort of filtering and determining whether a small business is eligible for something or not is the phase that accounts for a majority of the costs and the kind of delays and the manual work that comes in this process. Without good systems, if you're just looking at that manual process, a loan officer could spend weeks, maybe months, going back and forth and chasing that information. And so a lot of that is then making it a lot harder for them. So I'd say the top challenges to reiterate and answer your question, one is definitely the manual and kind of paperwork burden that comes and that the lender has to manage. I'd say there are a couple more things, for consideration. Sometimes lenders are trying to figure out how to evaluate a small business for an SBA versus another product. And so right now it's another manual thing that the lender has to do. Do I route this applicant for an SBA loan or for a conventional loan? Like, what is that fit for the small business that's going to help them here and that I can do? So that's the second piece. And I'd say in the last couple years, there have been some efforts by the SBA to streamline the application process and kind of reduce that manual burden that comes as a result of originating SBA loans. What that's caused is a little bit of change in the SOP, and that has caused some upfront work, I'd say, for lenders to accommodate and kind of adjust to these changing guidelines. But ultimately, it's going to be a lot better for them and for small businesses because it's going to be easier moving forwards for them to be able to administer SBA loans. So I'm personally excited. I think there's a lot of good stuff happening in the space. It is always harder when you've not started an SBA program before and now you need to lean in and figure out that universe of what it's going to take. But a lot of new tech is coming out to facilitate some of that, to maintain compliance with regulations and the kind of SOP requirements from there. And ultimately, it's good for the small business. Right now, a small business could go online and get another fintech or online lender loan really quickly, but those terms might be really bad for them. And we need to make it easier for them to get access to good, affordable loans. And that's something that the SBA loan program is perfect for. So I'm excited. There's lots of goodness happening in the space.
I mean, I love to hear that. And, I can definitely say that, at least from my side of the table, based on a lot of these conversations that I'll have with whether it's my clients, whether it's other banks that we may talk to through our podcast, it just seems that there is so much discussion around different ways to be not only supporting their communities, which is where support of a lot of those small businesses comes in, but also really something that you had mentioned earlier, which is a little bit of this rebound since COVID happened. And since there was such a huge impact on the industry, and what does it look like moving forward? And, how do bankers contribute to that? This is just, I guess, one more area that seems to fit.
Yep. Yeah. And you're totally right on the rebound. I totally agree with that. I think there's been a lot of hard things that the banking industry has had to reckoned with over the last few years. There's been a lot of regulatory scrutiny. The pandemic made things hard. Interest rates, went up to counter inflation. And there's just been a lot that they've had to do to account for all of that change. And I think in some way, the focus on trying to help small businesses grow and do so efficiently, it's been hard managing all those external factors, but I think a lot of banks are now thinking about growth and using tech to grow in a really good way. And ultimately it benefits the small business. And that's what matters here, that banks can fulfill their charter. They can do so in an efficient way, in a way that allows them to grow, retain the best talent, and continue to be that go-to source of capital for small businesses in their community.
So speaking of growth and in that area, let me ask you this. Earlier, you used a term that I just hadn't heard before you and I started talking, which is small business loan intelligence system. Help me understand how you would define that, what that looks like, and kind of how it helps to, I guess, alleviate some of these challenges that bankers may see in this SBA area.
Yeah, no, absolutely. It is a new type of software category. Lenders have had to manage for a long time, I think, a stack of different tech products, some of which talk okay to each other, some of which don't. But that has generally entailed your loan origination system, which I would call the system of records, in that you're evaluating a loan, you're underwriting it, you're moving it forwards to closing, and then you're moving it somewhere else for servicing. There's kind of your core systems as well that you've got to pass that information to. And the loan intelligence system is a new category that sits in front of the loan origination system. It does that intaking of small business loan applicants, and it transforms how lenders kind of engage with and convert those small businesses. Again, it's a reflection, I think, the category being created is a reflection of changing expectations in the space. Small businesses want things fast. They want things in an automated way. They want things to be easy. And lenders often have systems on the back end, like their loan origination system, that can help them spread a deal and understand it, but not necessarily do that first touch in an intuitive way with the small business. So the loan intelligence system is an intelligent intake system that can help that small business with that intake, that validation of data, and then it packages it all up for the lender to then evaluate without having to do all of the manual work up front. So for lenders, it has a lot of benefits, right? It automates kind of that pre-vetting of your small business top of funnel. It helps you identify who are good leads. And by cutting out that manual work, it improves the overall efficiency of those processes substantially. It also enhances the rest of the value stream. So if you're getting automated, real-time, really good data off the bat that your lenders aren't having to go get, then you're also putting better quality data into your system of records. And that then means that when it comes to greenlighting that loan and moving forwards, you have everything you need and you can do it really quickly. And then on the flip side, for the small business, there's a ton of benefit. They basically get the experience of an online lender, even better, without having to consider those really cutthroat rates. They get best-in-class digital experience from the lender, but also they get their relationship banker on the other side anytime they need it. And one of the pieces that I think is important is historically the small business hasn't had a feedback loop of what it takes to get to a yes, because it's really hard for bankers or lenders to do that at scale with every lead that comes into that pipeline. But using a loan intelligence system, you can, because the platform is going to automate some of that data gathering and some of that like feedback points that the small business can ultimately utilize. So if you think about that tech stack I mentioned in the beginning, right? LOS feeds into core systems. Think of the LIS sitting on the front end, doing that intelligent intake, automating the kind of decisioning of, hey, does this app, not decisioning in terms of replacing the lender, but just bucketing leads into, is this an eligible lead or not? And then validating that data in a real-time way, in a way that saves time for the lender, but ultimately it works side by side alongside the LOS. So you're not having to do any rip and replaces. You're not having to rip out core systems. You get to benefit from delivering a best-in-class customer experience to your small business without stripping out old systems. But then you're also saving a ton of time for your lenders. We've seen 10x improvements in some LIS use cases. And a lot of the space, I'd say right now, lenders are realizing that AI-powered tools, and AI is a big buzzword, and there's a lot of nuance in there, and we can dig in. But I think there's been a recognition across the space that AI can help lenders be better lenders, kind of take out the manual or repetitive work and allow them to focus on structuring deals and doing what they do best. And I think that's absolutely true. And with that increase in sophistication of technology, you can also generate net new value that you weren't able to before. So learn intelligence systems specifically, I like to think of them like an intelligent air traffic controller. It's going to identify whether a small business is a good fit for different loan products that a bank can offer, but it's also going to identify whether that small business would be a better fit for a CDFI, or whether that small business isn't a fit right this second, but they might be 6 months from now. And I think it's really important that across the space, banks start to move away from this very binary approve or decline sort of scenario, because ultimately banks want to be able to bring in customers on the SMB side, make them sticky, and then grow that relationship over time. And when you reject a small business applicant, you're risking turning them away and having them leave the bank altogether. And so I see learn intelligence systems as that key to empowering lenders to do what they do best. Just be that advisor, that person, that go-to who can help a small business structure a deal, but also a system that can think about the universe of possibilities on the table. Maybe someone's eligible right now, maybe they're eligible in 6 months. Maybe they're not eligible at all, but there's a referral source you could send them to where you're still going to help that small business at the end of the day. So there's a lot there, right? You're decreasing the cost of funding loans, of serving small businesses, of creating that value that lenders always want to be able to provide to their small businesses, but we're doing it in a really efficient way, in a cost-adjusted way, in a way that improves bank, ratios at the end of the day as well. So it's a win-win.
So I do want to talk to you about AI, and I want to get some of your thoughts on it because, as you mentioned, definitely a buzzword,
Yeah.
just a buzz topic really these days. But before that, I actually wanted to ask you about, so one thing that you had mentioned, and this is certainly something that I know comes up nearly daily for me in my day-to-day, working on a little bit more of the core side. But as we know, there are a lot of fintechs out there. And one of the things that quite a few of these these community bankers, these community credit unions will often have to deal with when it comes to adding new tech to their stack is the lack of communication between, what would be your LIS, the LOS, the core. So talk to me a little bit about how you've been facilitating that communication between the systems, or if you've seen any issues crop up there in that space of the industry.
Yeah, I mean, that is such a great point, Jordan. It's a real headache for a bank, right, to have to figure out how to make all these systems that don't talk to each other actually work. And it's been a real topic of conversation where banks, we'll chat to folks, thought leaders, SMEs in the space who are like, hey, I really want to be able to benefit from this great new tool or this AI thing, but we're doing a core modernization or a core conversion effort right now. And that has to be where we spend our time. And so it's really tough. I really feel for folks on the bank side who have to manage all of this and who end up with these really big, projects and roadmaps that have to wrangle all these different systems and make sure that they talk to each other. It's actually one of the reasons why the category, the LIS category, I think has emerged as a necessity. Banks need API forward technologies and tools that talk to other tools. It's no longer possible, I don't think, to be a tech vendor in the space and not have an open ecosystem for collaborating and sending information to other systems that banks need. There are a few legacy providers in the space that have taken the stance that they want to be a closed ecosystem. And I think it's a short-sighted decision because banks can't afford anymore to work with systems that don't talk to each other. And so one of the core attributes of a loan intelligence system is it's API forward, it connects to your LOS, it sends information directly there, it talks to your digital banking provider. It really cuts through those silos because silos are one of the reasons that banks can't access their data right now. And the banks of tomorrow, the ones that are going to win, are the ones who use their data as a profit center, as a growth driver, as something that gives them an edge, a competitive advantage in how they serve their small businesses and what insight they can use to create that value. And so I think it's time for banks to be able to say no. Like if it's not API forward, I'm not gonna bring it on because I need this both for my teams at the bank. They need to be able to access their own data and the insights that are currently trapped in these systems of record that don't talk to each other. And so that I can deliver this value to my small businesses, I need this too, right? Like this data can allow banks to understand how to better cross-sell to a small business or how to anticipate when a small business even needs funding. All of this is contingent on banks being able to access their own data. So I think it's a must. And without that foundation of data, it's not possible for lenders to execute an AI-powered strategy at all, right? You need the right data to go into your AI models, or else you're not starting off the right foot.
Right. Yeah, I really appreciate your insight into that, Alex, because again, like I mentioned, I feel as if I'm having very similar conversations with banks day in and day out. And so, getting somebody who's on a little closer tied, I would say, to that side of the industry, I think it's helpful. It's helpful for me, and I hope it's helpful for some of our listeners to kind of see what you are hearing and how you've been working through that. So it's very interesting. But let me take us back because I did want to ask you a little bit more on the AI side. So tell me, how do you envision AI-powered software continuing to evolve and shape lending in the years to come?
Yeah. I think there's a ton of opportunities. So just right off the bat, I think it's great that software, AI-powered software, is now capable of helping lenders do what they do best, which is serve customers, do it quickly, do it in a way that improves the customer experience, do it in a way that provides this unreal efficiency. Lenders used to be limited to the amount of working hours that they had in the day, and AI is changing that. You could intake 10 customers or 1,000 customers, and it's no additional, substantial lift on your lender side. Yes, they have to look at more leads, but the platforms of the future in the lending space are going to be helping triage and air traffic control and intake all of those applicants. So I think it's great. I'm very excited. Obviously, we're building in that space. Our product Parlay is AI powered, and it's designed to help with a lot of that manual lift that otherwise lenders have to do. I'd say just observationally across the ecosystem, there is also a lot of hype. So a lot of lenders are sort of thinking about AI in lending as this silver bullet that's going to solve everything. And I'm pragmatic in the approach, so is my team. And we say, listen, yes, it is true that AI can do a lot. AI is radically changing how well, as banks, we can now deliver services to our customers. That is great. Fundamentally great. And it is not this silver bullet. AI, even just talking about AI, people kind of wrap everything into that and they think about it as one cohesive thing. Or I'll have banks sometimes ask me, they're like, we really want Gen AI. Can you tell us how your platform does Gen AI? And I have to ask them, well, what are you trying to actually achieve? Because Gen AI is a type of AI. It's really good for generating things, right? Like content of a credit memo, fantastic use case for Gen AI. But if you're trying to do automated decisioning or automated classification of leads, then actually machine learning might be a better fit for you. That's actually what we use in our platform, a type of machine learning. It's a classification model that looks at leads and kind of identifies that. But the thing I'd say is just a general warning to the folks getting excited in the space is it's great. It's also not one type of thing. There's a lot of different capabilities under the hood of AI. And as you're thinking about what you want to bring in, think about the pros and also think about the potential drawbacks. Like the pros to me is AI will enable faster eligibility assessments, personalized loan products, like hyper personalized loan products. No longer these kind of static options, but this perfectly configured, tailored thing that is exactly right for the small business. You're going to have the ability to originate a loan in 15 minutes or less. Like that's already possible today. There's exciting, ways to interact with borrowers in an automated way. If a small business wants to have a chat at 4 a.m, what can they get clarification on from an intelligent system versus a lender who hopefully is also in bed at 4 a.m. But I would say there's also the drawback of, okay, well, if you're going to outsource any part of the lending process to an AI-powered system, you need to be a responsible user of that technology. I think the tech is going to be incredible for more experienced small business lenders off the bat because they understand risk, right? It's easy to automate origination of loans. It's harder to get small businesses to pay back those loans. And so how do we account for that complexity? If you have a less experienced team or maybe a bank that's just dipping their toe into small business for the first time, if they decide to use an AI-powered system, they could be originating thousands of loans and not thinking about the impact that might have on their balance sheet, on portfolio risk, on concentration long term. So, use with caution is always my reminder. And tech is only as good as the people and the processes that you also wrap around it to make this a really good experience for the small business on the other side.
I do think that that's such a good point about tech only being as good as truly any team can make it, meaning
Yes.
making sure that you've got the right team, the right surroundings, including the right surrounding tech stack, in order to really get the most out of it.
100%. 100%. And I think that the banking industry is at this inflection point where expectations from the small business have never been higher. And I think that if they want to be able to meet those expectations and compete truly and be here in 10 years versus, having these online lenders and stuff take up that market share, then we need AI-powered tools to help deliver that experience. But always, we need to be aware of what we're outsourcing from the tech standpoint. There are some types of loans that you could absolutely automate start to finish using only AI. And that's the smaller side of the loans. But there are some larger ones that you should probably never automate entirely. And that's okay, right? So it's an art and a science. Let's find the things that are inefficient and difficult and challenging for the lender and the borrower. Let's automate those. Let's improve the experience. Let's make it faster and more efficient so that the cost of originations drops and we can fund more loans for small businesses in the community. And let's proceed with caution as to what ultimately we decide we want to automate or kind of outsource to AI.
That's great. I really appreciate, Alex, you taking the time to come and talk to me, but also just to really share, to get your insight into this. I mean, you live in this world day in and day out. And, as you said, I think AI is a buzz term right now.
Yep.
And buzz terms are, don't get me wrong, they are buzzworthy for a reason. But understanding the reality of it, I think, is also what's important to a lot of our listeners. Understanding where others are in the process of incorporating AI, what are some of those realities, and also really getting a better sense of what is out there. Because as you mentioned, with a little bit of a boom in this area in the industry, that there's going to be fintechs popping up left and right that have potential offerings. So understanding what that landscape looks like, I think it just brings so much value to our community.
Oh, thank you. And I really love your point that there is a lot happening. There's a lot of new vendors. There's a lot of new types of tech offerings out there. If folks are interested in learning more about the loan intelligence system category, we have a white paper. It's available. You're welcome to download it on our website, parlay.finance. But also just a reminder that responsible consumption of tech is the way to go, right? Like, I love the community banking space so much because of the people behind it and what they can do, and the amount of effort and time and commitment they put into helping small businesses. I do not think that should be taken away, right? And so I'm so excited that these types of tools can help community bankers do what they do best, be more efficient, improve how many people they can serve, all of that. And always an and, let's make sure that we are really cognizant with excitement. We can still be excited about AI, but also just cognizant of the regulatory impacts, the worst case scenario impacts. And as with all good things, it's a great tool, but we have to know exactly what we're doing and what the risks might be if something goes wrong.
Absolutely. Absolutely. I think you really make several good points, but I think it's very on topic for many of our banks and really just a lot of people in the space who are looking at making the decision on whether or not they take that next step and where they start kind of dipping their toe in if they're ready to move forward.
Yeah, absolutely.
So, well, Alex, I really appreciate you joining me today. I know that this is something that we've been wanting. We've really been wanting to talk about this topic for a while because, quite frankly, we get questions on it from banks all the time. And so, having you come and join us today has been very educational for me, which I always appreciate, but also I think really great for all of our listeners.
Absolutely. It's been a real pleasure joining, and thanks for letting me chat about it. Tech is good. AI and lending is great. The magic is going to be high tech and high touch. And so we're at a really exciting point in the industry, in tech change. I'm excited to see what's next.
Wonderful. All right. Well, thank you so much, Alex. And we will talk to you again soon.
Thanks so much.
That's it for Bank Talk. Thank you for listening today. Have a great day and keep on learning.
Thank you for listening to the Bank Talk podcast brought to you by Remedy Consulting. To reach out to Alex, go to parlay.finance. Once again, in your web browser, parlay, PARLAY.finance, and you will get to the website. If you like what you hear, please rate, review, and share our work with others. Thanks again, and we'll see you in the next episode.